Yo, welcome. Thank you guys so much for tuning in. Today's video is going to be a trade recap over August's 23rd, 2024 trade. And let's get right into it. All right, so coming to today, I was anticipating for lower prices here based off of how we closed here on the daily time frame. So based off of this daily candle, I was anticipating for the next daily candle to be a open high low close candle. So I wanted us to take out the previous daily low, which was my daily objective. However, whenever we opened up here on or whenever we traded during London session and Asia session, we didn't show signs of bearish price action. We just kept climbing higher and higher. So we never really got a reaction to the 4-hour fair value gap like I thought we would have. So coming into the morning New York AM session, I was actually kind of just like I was neutral. I didn't know if we were going to get a reaction during the New York AM session or we're just gonna consolidate. So the very first trade that I took today was actually a long, and I will show you guys why here. So before we even look at the technicals here, let's take a look at the news. So we had Fed Chairman Powell speaking at 10 o'clock, and we had this Jackson Hole Symposium news, and this was going to be an all-day event. Based off of ICT's stream yesterday, I noted out how he stated during the week of Jackson Hole Symposium, I'm sorry if I'm pronouncing that wrong, but during that week of Jackson Hole thingy, price action is going to tend to be more choppy, a little bit sloppy, very back and forth, and to be honest, that's what we got this week. It was very, very, very difficult conditions for a day trader. But if you're a scalper, then conditions might vary, because if you're scalping, you're trading lower time frame objectives. So after I noted out how we didn't have any respect to the 4-hour fair value gap like I thought we would have, I switched my model from a day trading model to a scalping model. So I took my trade here based off of this 15-minute power of 3 here, and it is also in alignment with the 30-minute power of 3. So whenever I say power of 3, I'm basically just talking about how these candle closed. So this 15-minute candle and this 30-minute candle. Based on those two candle closures, I can anticipate for the next 30-minute candle to at least take out that 30-minute high. So I structured my trade idea based off of the power of 3, but I have to go into the lower time frames to find some sort of entry model or entry pattern. One thing before I go into the lower time frames is that we did create this 15-minute 15-minute fair value gap, and I wanted prices to treat this 15-minute fair value gap as a breakaway gap, because I was anticipating for prices to take out the high first and then maybe retracement back inside the 15-minute fair value gap. So there's two confluences already that I just mentioned. The power of 3 and how I'm treating that 15-minute fair value gap as a breakaway gap. So now I'm going to go into the lower time frames to find my entry pattern. So on the 5-minute, we don't have a fair value gap. On the 4-minute, no fair value gap. On the 3-minute, there is a fair value gap. So this 3-minute fair value gap, better known as a 3-minute BISI, buy side imbalance, sell side inefficiency, supports the idea of us taking out that 30-minute high and that 15-minute high. So I take my entry here at the 3-minute fair value gap whenever prices dips back inside it. And I do want to note out this here. So I took this trade during the live stream, and you guys can watch how I managed this trade and how I responded to some of the information that the markets gave me. So first thing that I noticed here after I entered the trade was how this 3-minute candle closed. This 3-minute candle here closed below the consequent encroachment of that 3-minute fair value gap. So we are disrespecting the consequent encroachment of the PD array that I used to enter off of. If that happens, I told myself that I would take off half of the positions. I'll take off half of the positions to mitigate risk. And in the live stream, I actually was able to, think clearly and really process the information. So I took off, I believe I went into this trade with 7 contracts. So I took off 3, I believe. It was either 4 or 3. I think it was 3. So I took off 3 contracts after we closed below the consequent encroachment. And then I just let the trade run. So I didn't, close off all positions. However, I did close half the positions. So I'm thinking to myself here now, okay, well, we just closed below the consequent encroachment. We shouldn't have done that if we were bullish. And I'm just going to continue to watch price action. And the next thing I did note is we now have officially closed below the consequent encroachment or below the fair value gap itself on the 3-minute time frame. That to me was signs that, hey, we're not bullish anymore. So I actually took off another 2 contracts here. So now I'm only trading with 2 contracts in this initial position. So my initial position, I had 7. And after we closed below the 3-minute fair value gap on the 3-minute time frame, I took off 5 contracts. So now I have only 2 contracts remaining. And I ended up getting stopped out here. The candle right after the closure below the 3-minute fair value gap. To me, I would rate this trade an A plus, or not A plus, but an A tier trade. However, the way I performed this trade here, actually on stream, I would give myself an A plus. I was able to, like I said, I was able to intake all the information that the markets gave me. I didn't let my emotions affect the way I was thinking. And yeah, overall, I mean, really good performance. As traders, we're not programmed to be robots. However, like, we're human. We're going to have emotion, but like the way you approach your emotion will greatly affect how you trade. And I feel like I was able to really manage my emotion here. But yeah, I do want to mention there too is another confluence here that I did have was I wanted to see prices rebalance this 4-hour fair value gap. Whenever I was taking this trade here, I wanted prices to rebalance this fair value gap entirely, and that was just another confluence that I had. So 15-minute power of 3, we had time frame alignment, we had the fair value gap theory, how I traded that 15-minute fair value gap as a breakaway gap. On the lower time frames, there's a supporting PD array that I used to enter off of. And yeah, it was an A-tier setup. I did, however, take 2 more trades here after my live stream, and I do want to go over it with you guys here. So the trades that I did end up taking was, I believe, okay, so I took another trade here actually. So this one was based off of how we closed here on this 15-minute candle. So based on this 15-minute candle here, this is I have an indicator where it shows me like higher time frame candles whenever I'm on like a 1-minute time frame. It shows me the 15-minute candles as well. This indicator just helps me stay aligned with the higher time frame, and it prevents me from being tunnel vision. But so I think this is my 3rd trade actually. I'll go over my 2nd trade, but I kind of skipped over it. So the 3rd trade in the very last trade I took today was actually based off of this 15-minute power of 3. We had a bearish candle after coming into a 15-minute fair value gap. So we had a reaction to this 15-minute fair value gap, and we displaced lower. So coming into this trade here, I actually was thinking to myself, okay, well, I know why we created this bearish power of 3. I know the reason we traded into the 15-minute power of, or 15-minute 15-minute fair value gap, and notice the consequent, look at the respect to the consequent encroachment of the 15-minute fair value gap. So I had a reason why we created that bearish power of 3. And on the lower time frames, we have a massive 1-minute fair value gap. Whoops, I shouldn't have deleted that. But we had this massive 1-minute fair value gap that we created. So I actually took an entry at the 1-minute fair value gap at 12:45. So this is the open of 12:45. So I'm selling above here. I'm selling above the 12:45 opening price. And the 15-minute low here, this is the 15-minute low. 15-minute low, and this is the 12:45 opening price. So I'm selling above an opening price, and I'm targeting basically the 15-minute low. So I still had the objective in mind, and after we take out the 15-minute low, I move my stops to break even. And yeah, that's like, it's a really small scalp, but in and out, very, very quick trade. And the second trade that I did take today was actually based off of, I believe it was this one. I believe it was this 15-minute candle here. So on this 15-minute candle here, wait, was it this one? I'm sorry, I'm having a little bit of a brain fart here. Okay, so yeah, it was actually based off of this 15-minute candle. So this candle here, this 15-minute power of 3, like I said, I'm treating this as a bearish power of 3. I'm treating this fair value gap here too as a breakaway gap. So I don't want to see prices open up on this next candle, open up, retrace into that 15-minute fair value gap, and then take out the 15-minute low. I want to see prices open up, trade into some sort of lower time frame PD array, and then take out the 15-minute low. And then after we take out the 15-minute low, that's when, like, I mean, I don't really care from there. That's all I'm taking is a small bite of the market. And so I'm targeting that 15-minute low here. So let me just mark that out. 15-minute low. And that becomes my draw of liquidity, my objective. And my entry here was actually based off of the midnight opening price, because I realized, okay, well, we actually are aligned with the higher time frame here. And notice how this opening price of the, notice how the midnight opening price actually aligns with this trade structure. So like I said, I'm targeting that 15-minute low, right? However, I didn't take an entry based off of a, I mean, I took the trade based off this 1 minute fair value gap. But I want to note out that I'm selling above the midnight opening price. This trade idea aligns with the midnight opening price. And yeah, overall it's another scalp as well. So I'm in and then I'm out. After we take out the 15-minute low, I move my stops to break even, and however low we go from there is not my concern. Or it is my concern, but I'm already de-risked from this trade. And yeah, that's gonna be the trade recap for today. It's very, very you know, today was a little bit harder to read, to be honest, because like I said, I came into today anticipating for us to see lower prices. We didn't take out previous day low, and we kind of just, the range here today was really weird. So small bites of the market is all you need. And yeah, thank you guys so much for watching, and until next time, peace out. Boom.